Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar price action has been relatively whippy over the last 6 to 12 hours. Early Thursday, the Australian dollar managed to break above the 72 threshold, but from posting an intraday high, 72.14 plummeted after the bears came in heavily and sent the market lower from the challenge. Also early on Thursday, the Australian Bureau of Statistics, the ABS, released the Australian January jobs report. According to the ABS, the employment change beat expectations at plus 12.9 thousand versus the expected 0. And the unemployment rate arrived on forecast at 4.2. Based on the technical aspects, I feel the market should again break down. We've seen many events or challenges above this level of around the 60-day moving average has not sustained and disappointingly always gives in to the challenge. I do anticipate it again, and if so, could see the market back towards 71.25 as an intraday target with 70.55 as a short-term base. A very whipsaw price action for the euro also, as the market again attempts to take on that challenge to the top side and failed. Also, it has respected the base around 113, the figure. Overnight, the minutes from the Federal Reserve didn't appear to differ from recent public comments from the US federal officials. However, in their discussion of the outlook for monetary policy, there were comments about stepping up their timetable for raising interest rates, beginning with an anticipated increase in March. Now, whether that's going to be a 50 basis point rise or a 25, that remains to be seen. But however, all eyes on the March Fed meeting and see what eventuates. From a technical point, though, as I mentioned, the upside attempt is likely to fail after this whipsaw price action and breaking down on the RSI and the MACD remaining relatively flat to negative. I feel we should see another challenge to the downside. A break of 113 figure should give further emphasis to the downside and look towards that base seen around 111 figure 35. The dollar yen also breaking down and still at this point in time holding towards the target of 114.70 where I've outlined here. In light of the recent upward attempt failing, and with the technicals remaining heavy, I feel the market is destined for the challenge of 114.70 and reassess. Sterling very whipsawed overnight as the market slowly digests the UK inflation number that beat forecast in January and hit the highest in 30 years at 5.5%, beating the forecast of 5.4%. Further rises in the CPI underpins expectations of more of a Bank of England rate hikes, with strong views for the third consecutive hike in March. So the Bank of England and the Fed are expected to raise rates in March. Sterling Kiwi has finally broken this trend line, but not quite, given the technical call that is to a further decline, even though the technicals are heavy. I'd like to see a close underneath this level, which is around 203.35, to give a destined objective that is around 2 the figure, or figure 70, where I've outlined here. With the overall pattern appearing heavy, should see a further slide into the European session. A very strong price action again. Didn't quite get the confirmation from the bearish outside range day at 1,844 break. From the rebound, market is attempting to climb back above that top side around 1,878 to 82 to 1,900. Now, what reversed this was the fact that NATO officials said they didn't have any evidence that Russia was withdrawing its military from the Ukraine's border. And also, US Secretary of State Anthony Blinken said that Russia has been moving crucial units closer to the Ukraine border, despite Moscow's insistence it was pulling back. With safe haven back on the table for gold, let's see if the market clears this recent high, which is, as I mentioned, where the rejection somewhere around 78 to 82, and that would give further scope towards 94 to 1,900. Unless we get a confirmation of 44 break, then it's likely to be a choppy ride. Finishing up with oil, well, the market, of course, has rebounded as well with the recent update from NATO. But from the technical point, we're not quite confirming as yet. I'm sticking to my guns that the fact is that from the bearish divergence that we are heading back towards $86 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look after the intraday report, and I hope you enjoy the rest of the day.